Okay. Your channel. Why haven't I gone live yet? There we go. Your channel. And I'm live. I'm going to turn down the volume. Hit the thumbs up button. If you're watching later, definitely hit the thumbs up button. Put on my do not disturb. Get to my Active Trader Pro. Let me make sure that Active Trader Pro works. And in so doing, show you what I saw on Twitter yesterday. You Vixie. James. I'm going to start out the podcast with, I'm sorry, I was wrong. The hubris in the management team at Target. Douche Jim Cramer, I was wrong. I was wrong on Target. Completely wrong. Humble pie being served. It was bad. I mean, it was a bad quarter. Again, I'll tell anybody this. If you don't own Target, go and buy it. Because the reality of the situation is it was a poorly managed quarter, but their management team, in my opinion, is good. The stores look good. I like it. Part of the problem was, in reading some of the commentary, $400 million of what they call quote-unquote shrinkage. That's these fuckers who go into Target and steal shit. I hate. There is nothing that I hate more than people that steal. Honestly, we all kind of listen. You cut the corners every now and then. When I was a kid, took a candy bar every now and then. But knowingly stealing $400 million, and they call it shrinkage. It's called shrinkage in the industry. By the way, I'm reading a comment. Mike Howard. Kudos, Mike. What's funny? I find this funny. Here, hold on. Let me show this. I might go to YouTube. It's going to show me. And I'm going to Safari View. I want you guys to all go like this comment. Because it's super, super nice. And Mike, it's awesome. Let me see. I'm going to go here. But I'm not going to play. This is from yesterday's. Is it from yesterday's? No. Mike, it's from using TrendSpider's market scanner and my algorithm to find stock trading opportunities. I think it's a short. I don't know. But Mike says, commenting purely from the algorithm. Mike, you're awesome. I am going to mention that. That got me my laugh. You have moved up to the number one position in my daily podcast rotation. Thanks for everything prior to listening to your podcast. I was throwing darts at the dartboard. That's what everyone does. Don't think anything about it. Mike, my kudos on finding my podcast. Realize what I try and do is just tell everybody, find a system that works for you. I have a system that works, that's easy to understand. I am an absolute dummy, a moron who has found something that worked. So delve into the deeper past few months. I've devoted countless hours studying charts, learning technicals. Fantastic. Love this. I used to naively view the market as a lottery. Nope, not a lottery. Yeah. Oh, and he lost me. Mike, you lost me with the last sentence. Mike, Robin Hood? Have I taught you nothing? I love it. I'm going to bring this one up because I do like it. I mean, if you guys can't see how happy like this shit makes me when you guys tell me that you're learning stuff, I mean, that's all the payment I need. But the supporters make me feel even more. When you tip me, here's what I know. And this is the only thing, this is the thing that When you tip me, I know you made money. So as happy as I am with these comments, the tips make me even happier because I know you made money. If James, if you didn't sell Target and you had gotten into Target yesterday and you lost money, I feel like I should tip you. And I do feel bad about it. I mean, Jim Crane, I'm sorry. Is he refunding anybody $600 because he told everybody to load up on Facebook at 120 and it dipped down to 80? No. Douche. My taxes. I pay my taxes, James. I guarantee you, with my financial position in, oh God, Target's even down further. I've paid more in taxes than the average American will in a lifetime. So I have no guilt whatsoever. I was telling somebody yesterday, I live a very meager lifestyle compared to my means. By the way, Taiwan Semi, I was looking at this chart yesterday. Guys, this is just a monster. And honestly, a couple days ago when it had this gap, should have seen it. Should have seen all the chips, but SOXL, it's still good. Hit that thumbs up button. I was looking. I wasn't seeing the thumbs up button hit. I know I had like 14 or 15 viewers live yesterday, but I only saw like 3 or 4 thumbs up. So hit that thumbs up button. And, you know, it is funny. Some people still reach out to me. I say the link is in the description probably 3 or 4 times. Yeah, Brian Cornell from Target. Rising interest rates and consumer demands. Ugh. But yeah, Taiwan Semi. Let's do some scans. And you know what I'm going to do? I'm going to start GarageBand. I'll bring this up on the podcast, but if anyone's thinking that this market, it doesn't have support, if you were watching my Instagram yesterday, you noticed UVixie and what I saw. World War III about happened yesterday with a Russian missile going into Poland. And the market held up. And I'm going to be a little bit slower today because I do have a bit of carpal tunnel. Some earnings today. Tom from Twitter. Okay. We're doing scans. I'm going to bring up that comment. That is funny. Oh, shit. I still got to apply for my Delta ticket refund. Man, that's not good. Come on, scan already. Okay. It looks like it's going now. Alert triggered. You know what I'm going to do? I'm going to log out. Log back in. There we go. Dow Jones 30. Okay. Scans, DIS. I like Disney here. I've told you guys under 100. I think Disney is a good long-term hold. I don't think that there's Oxy. This is funny. Am I going to get the same damn ones that I got yesterday? Current candle, Oxy, I guess. Yeah, maybe I am going to get them. Not owned. Disney and Oxy. I'm going to get the same damn scans. I ran scans at like 1 o'clock yesterday. I need to do scans of the same. Okay, that reminds me. I'm going to put a note in. do a scan of selling on the same groups of buying. Disney, yeah, I think it's what I have to do is look at the outgoing. And by the way, thank you to everybody. I shouldn't say thank you. I should say you're welcome. But thank you to everybody who's signing up for TrendSpider. I'm getting a lot of requests. And the people that signed up before, they're kind of messaging me privately. I wish they would make it public. In fact, Brittany Bitch made it public yesterday here on YouTube. But they're saying how much benefit they're getting out of TrendSpider. So I know it's not douchey of me to say, hey, sign up for this thing. But if you're listening to me, if you're, like you, James, and Zephin, if you guys join me every day, you don't have to buy it. You guys get the benefit of me kind of hanging in here. Come on, ARC Holdings. Scan already. This is Michael Burry, by the way. Cassandra, BC. He's famous for the Big Short. And papers yesterday were all saying he had no short positions in his SEC filing. So he's making fun of that. This is my weekly stock pick. Look, 9% he's up in 2022. 333%. That's crazy. Again, here, I'm going to retweet this. Need to start tracking my returns. My weekly is killing it. Completely killing it. Completely. I mean, look at those returns. God, I wish I had those returns. Who would you rather lose all your money? SBF, Kathy Woods, or Gabe Plotkin? Choose your fighter. I think I'd say Kathy Woods. Yeah. Elon, can you fix this? R.I.P. Jimmy Fallon. It's trending. A leading indicator. Ooh. This is a housing leading indicator is what Stephanie's saying. I don't know what it is, but October U.S. architecture billings. So essentially people paying architects to design things. It fell from 51 to 47. Ooh, that's bad. You know what that brings up? Okay, let's bring that up. Because you know what that means? We're going to get rid of this. I'm going to get rid of that. Okay. DVN. Short on the housing. NVIDIA earnings after the bell. I got to write that down. Earnings after the bell. Let's go to earnings whisper. There we go. Dollar General. Expected positive earnings. Walmart beats, Palantir beats, AMD beats, XOM beats, Meta misses. Okay, calendar. Aftermarket close. NVIDIA, Cisco. Cisco's going to be pretty consistent. Sonos. Starbuck. I have to put Zim. Tom from Twitter. I'll put this in my earnings update. See, I don't have an algorithm for earnings. I wish I did. Who's after the bell tomorrow? Ooh, Baba tomorrow. Baba. Oh, why am I doing that? And Macy's tomorrow. Jubia. See, I come in here with like 3 lines of notes, and then I wind up getting a shit ton of notes. Roblox. Yeah, see, this is just going to pull up. And then we go down here to Dow Jones 30, NASDAQ 100. It's going to pull up Roblox. No, Roblox isn't in NASDAQ 100. We'll go down here to S&P. This is going to pull up Disney and Oxy probably. Oxy's not even in there. Energy just isn't representative in the S&P. But then we go to the energy sector, and I've got all my scans. Yep, Hess, Fang, SU, Oxy, AMR, Apply. Is this Alta Mesa? I don't even know them. For some reason, the symbol seemed familiar. Tallow, I know, but I don't like because of that gap. Okay. I've got enough to talk about. Okay. Good morning. I'm going to move this down to the bottom. Boom, 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 boom. Hopefully you guys can still hear me and the volume's not. I don't know when I turn that down if it actually makes a difference. It doesn't on GarageBand, which is where I record this thing. Okay. Let us do. I've got that. I've got this. Let me move Active Trader Pro over so that's over there. I'm showing you guys that. The VIX is at 24. Okay, what am I? I'm going to start out with World War III. Oh, no. Good morning. It's Wednesday, November 16th. And I'm starting in a somber voice because this is how Jim Cramer talked when Facebook came out. I'm sorry. I apologize. My apologies for Target earnings. I was wrong. Target flopped. Target is down 15% pre-market. It's part of the reason why I tell you guys, hey, you know, if you want to play earnings on stocks you don't mind holding. Target is down. Let's see. Target, we'll go to this list. Target is down 15% to $150. If we look at this chart, it's not going to show the candle yet, but it's going to gap down, and it's going to gap down big. So it's gapping down from that 178 down all the way here to cover this gap that's well below. See that gap right there at 151? It almost covered this entire 179. I believe when we got this 173, I said we're going to cover that one. James on YouTube said he got out. Kudos to James. My apologies to everyone, including me, who may have bought more, like me. I think I got it at about 175 or so. I'm not worried. I added more to my position just to hold. Obviously, Walmart is the one. If we go over here and we go to Target, so you're going to be down 15%. It's going to be down even more. Year to date, you're going to be down here. You know, you started the year at about 220, so you're going to be down almost 30%. This is just, it's a horrible, horrible stock right now. I would not be adding to it. I would not be shorting it. I kind of said, hey, if you want to play, you know, earnings and you think that it's going to run, it covered this gap, and it had, from a technical standpoint, it came back and covered these. I would probably be buying at 150. In fact, I may sell the short lot that I did from a tax perspective. It might make sense for me. So I've got to look at it, but again, my apologies. What a douche he is. Let's start off with some good news. There's two things. First off, Mike Howard commented on a short that I had. He's super, super sweet. He said that he's learned a lot. And if you guys were watching on YouTube, you saw how kind of choked up I was and happy this kind of stuff makes me. It really does that you guys are learning stuff. But what I want to comment, Mike, is it is so funny. Because for some reason, you might have done this with speech, you might have done this somewhere else, but you said commenting purely for the algorithm. Not the algorithm, the algorithm. So Al Gore, hey, what's up? Let's dance, Al Gore. And then you went on to say some super nice things. Thanks for everything. Prior to listening to your podcast, I was throwing darts at a dartboard, stumbling upon your podcast. I want to just make mention that what he says is, hey, he's learned the system. And the system is what I'm trying to get to you guys is there's a process that works for me. Maybe it works for you, but if you alter it, find something that works for you. Because if you just do the work and learn about it, it's great. Hey, and Mike's on YouTube. High five, Mike. But here's where Mike lost me. The last sentence. I am now consistently growing my meager RH account. Robinhood. Mike, have I taught you nothing? I went off on it on the beginning part of the YouTube live. So, Mike, thank you so much. It really does make me happy. And kind of like I said on the on YouTube live, this kind of compliment it fills me up with joy, makes me happy. I am so glad that you guys are learning. That's why when I get your tips, I know you guys made money. When I give you these target kind of recommendations, it makes me feel like I should tip you. So I'm sorry. And I will never get over that clip of him crying on TV. I'm sorry. The hubris. What a douche he is. But I just still do watch him. The guy knows what he's talking about. He just has really bad picks. I mean, honestly, every trader has them. Look at Cathie Woods. Look at even Warren Buffett during periods has had downside. He hasn't been the great Warren Buffett for his entire, 50, 60, 70-year trading career. So another listener reached out to me, Antron or Bud on Instagram. Thanks for all the teachings and information you provided on Spotify. What do you think of NLST since it has been in a long-standing battle with Google and Samsung over infringement? So let's look at NLST. I'm going to start this out with this, and then we'll talk about World War III happening and what happened in the market yesterday. LNST is Netlist Inc. And I looked at this chart yesterday, and I was like, this one, it looks like a falling knife. The chart looks ugly. There's nothing on the upside that would tell me this is going to swing other than the volume. You see these volume spikes right here. The RSI is down at 24. At one point, the RSI went up to 77 on October 18th after being at 26 on October 13th. And the stock rose from $2.50 all the way up to about almost $3.52, looks like the high right there. So it was a good move. It was a great move, 30%. The algorithm is built on 4-hour time frame. This looks like it's an even tighter time frame than 4 hours. So my algorithm would not work on something like this. This is probably similar to AMC or something of that sort, where retail traders kind of take this one. And if we go over to FinViz and look at NLST, NLST. FinViz doesn't even have it for some reason. I thought I looked at it yesterday. Let me see. Why is it not? I thought I did. Maybe I didn't. Yeah, FinViz doesn't have it. NLST, I kind of, again, I would say trade it on a tighter time frame. You might make some money because the volume indicators indicates that it's there. Let's see about if Active Trader Pro has it. Active Trader Pro does have it. Let's go over there. Because you can see, this is a 2-day chart of 1 minute. You can trade this one. I mean, you can make some decent money. Long term, I wouldn't invest in it. I don't know enough about it, but I can't imagine it's making money. It's a micro cap, so be very careful. You can clearly see on Active Trader Pro, the 10-day volume is 1.2 million. The 90-day volume is 475,000. So it's gotten some interest, most likely from retail, and I would trade it on a super tight time frame. It's not something that, because I can't find any information on it, I don't think I would necessarily go out and look for a significant, hey, I'm going to YOLO this one and it's going to make a ton of money. Just probably not the thing to do. So let's talk about, I've got some other listener stuff down here too, but let's talk about the market overall. This was what was interesting. I'll go back to Active Trader Pro. And you'll see, I'm looking at UVixy. And yesterday's market, you were trading right, it broke $9. And I kind of have always said, hey, when it goes under 10, it might be a good idea to kind of move this, buy it and wait till it goes over 10. The VIX has just not spiked. But yesterday, we got news of a potential World War III. There were 3 missiles, I think, that landed in Poland and killed 2 people. It was said to be Russian missiles. Russia denied the fact that it was in Poland. It was determined by Polish officials to be part of missiles that were shot down and just wound up landing in Poland. There's still some questions as to whether NATO will respond, because Russia has been very well known about not having specific, very good targeted missiles, we should say. But this was World War III. Now, here's the thing. The VIX spiked. The market went down. But the market held up. Essentially, the VIX calmed down. It pulled itself back. In pre-market, UVixy is at $9.20. It's down. It was at $9.35. That's where it closed. It's at $9.25. Target isn't necessarily bringing the UVixy up. It's not doing anything to volatility. The market is fairly steady. And with World War III coming up, that's decent news. So in my mind, I think that points to me that we've got some strength. We will be down today. Those high fly movers, that NASDAQ is going to be down today. I'm seeing it in my portfolio. If you've got long-term portfolio, you'll lose money. So my goal on days when I lose money is to trade and try and make $1,000. That's always been my goal, is I'm going to make $1,000 on days where my long-term portfolio loses. Because over a long period of time, remember the 40-40-20, the 40% and the 40%, so the 80%, if it's going to lose money, if I can make $1,000 on that 20%, I'm pretty happy, So that's kind of the way I position myself. This was an interesting one yesterday, and I wanted to bring it up. It was a Jim Cramer buy for me. I think I put like $5,000 or $10,000 into it. It's not a huge position for me. But October 18th, American Eagle Outfitters crossed here at $10.26. And I kind of noticed this strength, and it's a huge amount of strength. Well, it's up to $13. Now, nobody, and I mean nobody that I talk to, and mind you, most of my friends' kids are in college now. When I was investing in American Eagle Outfitters and other kind of things, they were in late teens, somewhere in that neighborhood, and they did wear American Eagle Outfitters. I know nobody who wears this now. I haven't been to a mall. I don't know what the store traffic is like. I haven't walked in there. The algorithm loses you 42% on this. Buying and holding loses you 25%. I'm down probably, I think, 50 or 60%. But at 13, you can see it's outside those Bollinger Bands. You've got this cross up here, and you've got earnings coming up on November 21st. It did cross the 200-day. So you're using the 200-day at $11 as support rather than resistance. It broke right through there, and it has not broken through there in quite a long time. If I pull this back, you can see we've been using that 200-day as 200-day, I should say, as resistance for quite a long time. Let's go to the daily and let's see if it's above. It's not above there on the daily. And you can see on the daily, there's all kinds of gaps above this one. The gap that's in range now is 1626. It is, again, outside the Bollinger Bands on the daily. Look at the earnings coming up. The MACD is crossed up. The RSI is at 69. I probably wouldn't buy this right here because it's a little bit too hot. And if we do pull back, in fact, today you're down 4%, almost 5%. So I do think I wanted to keep an eye on this because, and there's one name that I wanted to bring up for earnings tomorrow. And it's before the bell, I believe, but it's Macy's. And Macy's is retail as well. We got a good retail number, and you can see we just had a cross up here at 21.27. You're at 21.44. You can get that 21.27 at some point today. Here's the problem. You've got this gap down here right below. That worries me, and it's above the 200-day. So there's one down here at 1664. That one worries me, but not as much as this one. So your stop, and you've got to clear. Let's pull this volume over here. If we pull that volume over there, August 16th, you can clear right below that gap. There's a support at 1880, volume level support. So you can clearly see that there's some volume support up here at about 20, not much. 20, right? If you add these together between $20 and $20.50, there's probably a good amount of support there. But clearly this support down here right below this gap, it worries me. But I think you could look at this one as we got good retail numbers. Walmart had good numbers. Target is saying, hey, we've got an inventory problem. We have to put sales on in order to increase our customer coming into the store. But I think Macy's is a different breed. And I think because you're covering these gaps right here, I think you could see some type of move up in this one if they say, hey, we've got a strong e-commerce business. The consumer is strong like we saw in the retail numbers this morning. I think you could play this one. I hate to tell you to play this one again after my Target loss, but I like this one. I really do. And here's my challenge to you. And remember what I always try and tell you. Invest in companies you like. Go on Macy's.com. Do you need a bath towel? Do you need a bathrobe? Do you need a bath mat? Do you need a shirt? Go on Macy's.com. If you like that experience, buy the stock. Because you know what? If you like that experience, other people would like that experience. If you go into a Macy's store, which I do, I like the experience. I don't buy anything because I'm freaking cheap as hell. But when I see something on the clearance rack, I'm all over that. All over that. So I would challenge you to maybe look at Macy's.com. If you can get into a Macy's store before earnings tomorrow, even better. They've got an ex-dividend date. And let's look at some of their fundamentals. And that's why when I noticed American Eagle, I wanted to bring that up because I did see some, the Macy's. Now here's the PE is 4. Let's look at American Eagle Outfitters. So we're kind of looking at the same team. Look at this. PE is 14. Why wouldn't I buy a Macy's at a PE of 4 with a 2.94% dividend? Now Macy's is down 18% on the year. So that's where I'm trying to point you in the direction is do your own research, understand what you're buying. This is a downward trending stock clearly, but I like it. And they've got on their last earnings call, they said there was a strong retail presence. Now you're running right at the last monkey, the analyst was Morgan Stanley. They raised their price target to 22. You're trading at what? 21. So you're right there. And Zacks, don't listen to Zacks, but go back to God, Zacks is the only freaking one that covers. Bloomingdale's tapped Spoil and Branch to introduce new sustainable luxury bedding, and then upgrade to FinViz Elite to see this. What you should know, Bloomingdale's releases. I don't know. There's not a lot of articles on here, but I like it. I like it a lot. So that's an earnings one that's coming up. Another one that I posted yesterday that I thought was interesting was Datadog. And this is a software company. It is a Kathy Woods favorite, so it's super, super far down. We had this MACD cross up here at 77. You're trading at 82. I think you do have some support to get back here to the 67 to 74 level with that gap that's right there. But the reason why I posted this one is to try and keep an eye on it. I think, have it. No, I need to add this to my not owned because I am going to keep an eye on this one. I like it for its rebound capabilities. Datadog is one of the leaders. And if you look at Datadog, they are in the software business. They are not making money. Their forward PE is 73. This is a super, super expensive stock. But look at CRM. They've got a PE of 302. So if Datadog is making the same kind of inroads in technology and software that CRM is doing, in my mind, I think it's a good buy. And I did talk with a software developer who believes that Datadog is better than CRM. Might be just personal, but here, why Datadog, Mongo, and Atlassian rallied today. First Motley Fool article. Motley Fool's good. Zach sucks. So Motley Fool will give you more indication. Look at the $85 price target on November 2nd by Macquarie. And they rate is neutral. Look at October. Concord Genuity. Hold to buy. They raised their price target to 110. You're at 86. So I did want to keep an eye on this one. If it does lose its support, the next run might be one to actually get into. I like the support level volume here, and I like it. Let's talk about earnings today. NVIDIA is the top dog on earnings today. This is a chip company. They announced earlier that they had developed a chip that was not against the national interest, so they could sell it to China. This one has been in the middle of a historic run. It's kind of lost. Today it's down. Look at that candle. In fact, we just opened up, so the morning candles are opening. Look at that candle. In fact, since we opened up, let me just go back. And for the YouTube audience, I'll do this. Look at the gap. So this is going to create a gap from 176 to however high this closes today. But you can clearly see at 151, 152, that gap is going to be huge. And so that gap will need to be filled. Look at the RSI. Everybody's selling today. Look at that MACD cross down. So that 173, it's going to get you out of that 173 with a huge loss. But those Bollinger Bands are expanding. In my mind, I think those Bollinger Bands start moving back up. Because you can't tell me that you're not going into Target and buying $500 worth of laundry detergent because it's a 5-for-1 sale. So I do think that Target is probably a good, if you don't own Target, add a couple of shares. I'm a believer in Target. But let's get back to earnings. NVIDIA has this move down, and it's right before earnings. You can clearly see that the volume levels, they're kind of staying the same. The MACD is crossing up high. That RSI at 67, I probably wouldn't play this into earnings just because of this run. I think that run is there. If they come out with some crazy guidance, and that's an if, this one goes back up probably to these levels at 188. I would rather see you wait for the earnings announcement at 4 o'clock and then say, you know what? I'm going to get in here. Get in 170 instead of 162 and wait for it to run to 180. It might be 10%. It might be 5%. You might be able to time it a little bit better. Earnings, remember, my parents don't have this. You have to have after hours ability to actually trade. Fidelity's default is not to give it to you. You have to ask for it, and then they tell you, well, you can't be guaranteed a price, blah, blah, blah. But I like this one. If you like a little bit of a more calm earnings today, Cisco. This is what put me through college. This is what got me my Wendy's Frosties while I was hungover in college on the Sundays. I basically would buy and sell this one. It was interesting because there was I think I brought this up yesterday. There was a guy who was saying that FANG, Facebook, Alphabet, Amazon, Apple, all of those companies, they won't. He was likening it to Cisco back in the 2000s. So here, let's take a look at. We'll go back to a monthly. And here's what you see in Cisco. So Cisco back here, you could trade. Here's 2000. Remember, I'm an old guy. And so if we go back, no more data. This was probably around the time when I started trading Cisco. You can clearly see, I mean, you were trading somewhere here in $2 range. You got up to the $54 range. This was where I got out of Cisco, right before the really dot-bomb crash. But if you were in Cisco, which, by the way, in 2000, hey, Cisco's going to drive the internet. Their servers are the best. They make the best network software. Nobody can live on the internet without Cisco. That's where this was at a $63 range back in 2000. If you've held on to Cisco since then, you are still in the red. And that's what's important is understanding that, yeah, Cisco's still around. Cisco was building the internet. Cisco was one of the great companies, just like Apple, Google, Amazon. They could be in the same situation. So this guy was saying, hey, if you invested in Cisco because they were the giant king, they were the dominant player, they were the ones building the internet, you still haven't gotten back to positive on that. So it's an interesting kind of look. But from a standpoint today, Cisco's not a bad buy. It has lost some money. They're back above the 200-day on the algorithm. You had to buy it here at 40. You're up at 44. So you've gained your 10% on what is a pretty solid company. They're not going to surprise. They're not going to say, hey, we've got a crazy amount of orders. If they are to surprise, it will probably be on the downside, not necessarily the upside. You can see Barclays in September downgraded them from overweight to equal weight. Nobody really loves them. There's a Barron's.com article, Street.com, stay patient as Cisco Systems continues to build a base. My belief in Cisco is if you get it between 40 and 44, you're in good shape. You're not in bad shape. I think closer to 40 is probably the base. You got this gap down here. But if you're afraid of Nvidia, Cisco's probably your safety. Again, if money is burning a hole in your pocket, because you got to be patient in this market too. Sonos, there's always rumors of Apple buying Sonos because their speakers suck. Apple speakers, I say. Apple speakers are horrific. The HomePod, the big one, it was good. It was decent. It was overkill. The minis, horrible. I don't have one. In fact, I heard one at a friend's house. I'm like, why would I buy that thing? Siri sucks. Siri is the worst assistant out there. Google blows her away. Alexa, Alexa could be better, but it's not bad. I have an Alexa in my house. It's in the other room. I use Siri a lot more on my iPhone and my watch. I can't imagine using it in the house, paying $100 for one of those shitty speakers. So Sonos is great. Sonos is unbelievable. My parents have a Sonos Beam, I think it is, soundbar with the incredible subwoofer. I get yelled at all the time. Yes, I'm 52 years old, and my mother yells at me, it's too loud. It's too loud. I love turning up movies. In fact, my dogs go and sleep in the mud room. Like last night, I was watching a Bryan Cranston movie about Lyndon B. Johnson. Great movie on HBO. I forget what it was called, but it was unbelievable. But Sonos, they're coming up with earnings. Last time I played this on earnings, it was a while ago. I'll pull this back to show you the last time I really played this on earnings, because it was during the run up. So let's go to a weekly because I can show you. Last time I played this on earnings was around here. It was trading around 15, and I said, I think I want to play Sonos. And it just, I got lucky. Honest to God, I got lucky. I thought this was about the time where my parents were looking at sound bars, and I'm like, you really can't beat Sonos. My buddy Steve said Sonos is unbelievable. He was buying them for his outdoor speakers, indoor speakers, everything. He loved them. They had confirmation, and they just continued to go. Today, they do have some confirmation. So could you get back up here to 30? I don't know. That's a big ask, because here's the thing. Your PE is at 20. Is a speaker company good enough to put growth in at a level that Google is? Are they growing their earnings like Google is? Look at Google, 19. So I would probably rather own Google than Sonos. But if you're inclined, if you have a speaker system in the house and you like Sonos, look, it's put in the floor there at around 13. You're trading at 17. You've got this gap here between 19 and 21. You could fill that on a good earnings call. So I like it. Another earnings, Starbulk carriers. We're going to go into the carriers now because there's two specifically. Starbulk is one that I've played. I've traded in the past. It's got gaps all over the place. It is super volatile. The algorithm makes you 103% over 1,000 candles. If you just bought and held, it's 183%. Your average win is 10%. You win 58% of the time. Look at this. You have the buy here at 1908. You're trading at 1993 right before earnings. These are crazy. They go crazy during earnings time. Look at the last earnings. It kind of just sat there, but it just got tanked. Look at this one. It ran up right before the earnings. Then it got tanked right after the earnings. So I don't know if I'm hitting this one too late. Look at this. Right up until earnings, went up to earnings, kind of tanked, kind of just sat there, went up before earnings. This earnings period, right on the earnings, it got you a buy, it ran up, 10, 20%, boom. So at $19, I think if you can get this at $19.50, because you have that button hook there, it's clearly using that 200-day at 21 as a resistance level. So might be worth the buy. Tom from Twitter says Zim. Zim is his pick. He says they always kill earnings. They usually do. They announce some type of dividend, and their earnings are usually pretty solid. You can see it kind of does. It's super volatile as well. The algorithm makes you 14%. Here's the killer. Buying and holding makes you 129% on this stock. You win 39% of the time. Your average win is 16%. So let's look at Starbulk carriers. Let's look at their PE is 2. These usually, but their dividend is 32%, by the way. They pay out crazy dividends. Both of these pay out crazy dividends. Starbulk carriers year to date, they're down 10%. Zim, on the other hand, their PE is 0.51. Their forward PE is 320. Their dividend is 102%. So you can see it's clearly putting in this capitulation down here. Is it going back to 50? I can't imagine it's going back to 50. Look at August, Citigroup buy to neutral. Jefferies initiated in July a hold. They have a $50.5 price target. You can look at the PR newsletter, Zacks, Global Newswire, 15 global and logistics shipping companies on Insider Monkey. You can look at their view of the business. Their earnings per share this year grew by 766%. Are they going to continue to show that kind of growth? I mean, that's the crazy part. Remember, shipping was this was the logistics of post-pandemic, is trying to get stuff out. So Tom likes it. I love the dividend, honestly. And if they announce another dividend, you're going to see this one explode. It does have a gap up here, ironically. Look at that gap between 44 and 46. Doesn't mean that it's going up, But ironically, it's below the 200-day back then. But look at how fast the 200-day has just cratered. And it was the gap was caused by that dividend payment. It's that 100% dividend. They might announce a special dividend. They basically give back to their shareholders. So I do think that one, I'm not playing it. I'm a boomer. I play it safe. Baba is coming up in the morning. It's interesting. Baba, 78. We got this cross up here at 68. They could announce something crazy like forward guidance. China's opening up and we're seeing an increase, blah, blah, blah. This is a stock that you could gamble on. If you're younger, you have to have some exposure to China. Some. Not a lot, some. You guys know I hate it. I absolutely hate it. But you have to have some. So, by the way, I forgot to mention this. Datadog, which I brought up earlier, one of the main reasons why I brought this up. You know what? I'm not even showing the Safari view. God, I was on Active Trader Pro the whole time. And I'm just looking down. My apologies. But you know what? If you got TrendSpider, you could follow along on your own. Boom! Sales pitch. But Datadog, what I like about Datadog is, and I have to zoom this in, because one of the things that TrendSpider allows you to do is look at insiders. And Matthew Jacobson, who's a director, has just bought Datadog. 3 huge lots. $50 million, $663,000, and then $20 million. He bought all that in the last few days. So Datadog has seen a huge influx of insider buying. And that's why this one's so interesting. But let's go back to, I'll show you Zim. Show you some of this other stuff. See, here's Zim. I got to get rid of this. There's Zim. It's just not super exciting. Sonos. I'll go back and show you Sonos. Sonos, I like it. But here, let's go back and I'll show you the daily of Sonos so you can see kind of the gaps that it's filled and the trading before. See how it went up? It's now a downward trending stock. It's trying to make its way back to that 200-day. Scans. Let's talk about scans, because I'm not going to go back and show you all the Cisco and NVIDIA stuff. But Cisco, you can see for yourself. Just go back and look at Cisco's thing. Scans, one that I really like, and Jim Cramer is calling for the firing. He's bearish on Disney. I like it. I mean, we just had a cross up at $95.53. You're trading at 94. I think an 80 handle. So if you get it 89, I think you could really do well on this one. And it's not that it's expensive. Its management team has made every wrong decision you could make. And so that's why Jim Cramer says Bob Chapek needs to be fired. I'm not a Chapek fan. I mean, look at the earnings, $1.09, 30 cents. They're just not monetizing. ESPN, if they announce ESPN a gambling deal with DraftKings or somebody else, I mean, God, they're showing spread lines, by the way, on Sunday Morning Countdown. So I like Disney. I do. I use Disney products. I don't think it's going anywhere. Are you in danger of it going down to 70? Maybe. I mean, again, if they have pricing power, though. Look at their cruise ships. I know people who go on Disney cruises who won't go on any other cruise line. So are you going to the parks? Nobody's stopping from going to the parks. They hired a bunch of people. They paid higher salaries. Their costs are not in line. It's part of the problem. But I do think that Disney, is it going back to 170, where Jim Cramer was pounding on the table, you should buy it at 170? No, it's not going back to 170. And the reason it's not going back to 170 is the multiple. The multiple's still 54. It's still super expensive. I would rather see, if you're going to buy for the streaming, buy Paramount. I told my parents last night, look at Paramount's PE, 4. Forward PE is 14. Look at Netflix. My dad said Netflix launched 4 tiers or something. P is 29. Why wouldn't I buy Paramount instead of Netflix? Paramount's got Yellowstone too, by the way. I'm not a big Yellowstone fan. I watched the first season. Thought it was okay. Wasn't kind of taken with it, but the scenery, unbelievable. So let's talk about the next one, which I am bullish on. Occidental Petroleum, down 1.61%. We had a cross up here at $74.43. You're below that right now. It just got you out with a 13% gain, which easily could have been a 20% gain. I am still holding this one. I held it through earnings. It's got a small dividend, not a big dividend. You've got some volume shelf here support at about 72. The biggest volume, let me pull this back. I'm going to push this forward to the recent highs of August 30th. And if we look at that, you do have some volume shelf support here at 72. If you break through that, you probably have 60 in the realm, 69. 66 would be the ultimate. And that's right at the 200-day. We're coming up on December 5th, where the Russian oil embargo from the European sanctions go in. That's going to push the price of oil up. I do believe in that one. So Occidental is a good one. LECO, Lincoln Electric Holdings. This is one that I saw yesterday with a secondary cross up. I wanted to bring it up because the chart is just unbelievable. You started here with a cross up at 125. You've had several, back in July, you went from 125 up to 147. It's October, you went all the way down to 125. You're back up at 147. It's clear you've got that head and shoulders kind of pattern that's creating. So I wanted to bring this up, not because I think you should buy it, but it should be on your watch list for the next 125, because it's clear that 125 to 130 is just the bottom support there. And let's look at that. And I just looked at the chart. I didn't look at the fundamentals. But their PE is 20. Look at the double bottom. You're seeing it right there. So I think it's going to pull back there. I don't think that they have earnings coming up. Their earnings, the next catalyst is the dividend on December 28th. But I don't think it's a big one. It's 1.72. These guys, January 6th of this year was the last. Loop Capital said $170. They're still trading at 148. It hasn't gone up there. Look at some of the things. Lincoln Electric, through its subsidiary, designs, develops, manufactures, and sells welding, cutting, and brazing products worldwide. It's super exciting. But it had a cross-up, and it was a secondary cross-up. And I saw on the chart, clearly, I wanted this one in my to-own list because I want to see when it goes back down to that 125. My personal favorite of recent weeks is Roblox. And we had a cross up here on Roblox. We've been kind of capitulating here. 36.75. You're down at 35. I think you could go back down to this 20 line level in a bad market. You can see with the recent run up that we've had, their earnings came out. They gapped down on earnings. You've got this gap here between 36 and 38. I think you're heading back up there at some point. You had this cross up. It's not quite bullish. The Bollinger Bands haven't synced up. You can see they synced up here and then just dropped. And it was a catalyst for an earnings just to go down. You had this 12% gain right before earnings. It was reported that Apple is getting into the metaverse. That's what's taking this one down. It was well known that Apple was getting in there. So, Oxy and Roblox. There's another energy name that crossed up, Fang, and this one's got a fat dividend. Oxy doesn't have a great dividend. Diamondback Energy does. It was a secondary cross up, so it's been super high. You've got what I wanted to point out when I brought this one up is this gap here between 121 and 125. As we get closer, you're seeing the dividend date is tomorrow. It's actually today. Let's see. Fang. Their dividend is like 11%. No, it's actually 1.81. Where did I get that it had a fat dividend? Maybe it was a special dividend that they paid. Year to date, it's up 60%. It's flying. I mean, it's an upward trending stock, got a secondary cross up. It's got all the confirmation in the world. It's energy. It's energy. There's no, another energy name that had a cross up, Hess, H-E-S, Hess Corporation. I think I brought this up even at the 107 level and said, hey, this gap that you see here, gap up, it's a little bit dangerous, but I think with energy, you're fine. And you're at 148 right now. 107 was the algorithm. So, again, energy, it's great. It's just good. Let's get down to my notes. Target, lowered guidance, got killed. Will come back. Let me see. Where's Target at right now? Target's at 152. It started to come back. That gap that you see forming right here, it's going to gap down. It's going to fill that gap. I think you're going back up to 170 at some point. I don't think you're hurt by buying this one and holding it, kind of like I did. Lows, they beat, and they are up. They were up by 2% in pre-market. They said their business is good. In fact, while Andrew Sorkin was interviewing the CEO, a listener wrote in who was a contractor and said, I own a small to medium business, several contracting companies, and he said, all of our folks are booked through 2023. We're just worried about 2024. So Lowe's, Home Depot, I think you could do well on either one of them. Apple announced that they are going to use the Taiwan Semiconductor chips that are made in Phoenix in 2024. So again, bullish. Did Warren Buffett know that when he poured into TSM? Did Apple tell him, yeah, we're looking at buying the TSM chips? And he, essentially Warren Buffett said, you know what? TSM, they've been beaten down. I'm going to buy them. So trading at 79. It's got super huge bullish, chips. SOXL should be in that one because chips were just too far beaten down. SOXL, you had this cross up here at 927. You're trading at 12. See how it's lost it? It's kind of hit that 9-day. Won't get you out, but that button hook has started. Does it mean that we're in for a second leg? Because look, it just broke the 200-day. Now it's below the 200-day. I would wait. If it breaks that 200-day again, we're in for another ride. That's kind of my thing. Zim earnings today. Stephanie Link just posted the October U.S. Architecture Billings Index, ABI. It fell to 47 from 51 in September. She says that's usually a leading indicator. To me, that being a leading indicator means DRV, because that means people are building less. DRV's got this gap down here between 41 and 42. The algorithm doesn't have you in as a buy, but it's coming damn close. It's moving up, and the algorithm, that MACD, is moving up. The RSI is at 36, so it's kind of in no man's land. You're capitulating here right around the 200-day. In my mind, it's using that 200-day not as resistance, as support. You can clearly see it's hovering around there. If we close above that 200-day and that MACD crosses up, I think you're covering this gap between 58 and 61. So there's your 10%. I think this one below the 200-day is still in play just because that morning candle right now is still under the 200-day. It hasn't broken through. If this afternoon we break through that 200-day and some reason wind up, I think you could. Walmart, I wanted to bring up Walmart because they're up another 2%. They're at 149. So while Target says, hey, we went down, we couldn't manage our inventories well, Walmart's up. In fact, it's one of the only greens. No, I've got others too. Let me see. Abbott is up. Google is up. J&J is up. You're getting back to your staples are up. Let's look at UNH. This is a podcast favorite. It's been beaten down. It's at 509. It's not crossing up at any point, but you guys know I say under 500, buy this one. When it was up here at 560, I said, hey, you could buy it. This was a good, it got you in at 516, and it turned so fast, it only got you out at 525. But I would buy and hold this one. This was another long-term one. Let's say, Michelle, I'm trying to spend some money today. I'll talk to you, Michelle, afterwards on this one. We'll get you set up for today. Zephan saying he can't see anything, only seeing the UVixie chart. Yeah, everybody was yelling me on you. I was ignoring you guys. What do you want? SQQQ. Yeah, watch TQQQ and SQQQ. Let's take a look at those. Because TQQQ, while we're in this market, I would say yesterday's, hey, World War III is happening, and it just kind of capitulated. I think TQQQ could go to this 200-day at 25. But you're seeing a button hook now in TQQQ. If we go to the inverse, which is SQQQ, are we seeing support? Did we have a buy? We don't really have a MACD cross up. You're in no man's land in both of them. So, be patient. No reason to say. You can see SQQQ had no confirmation. It was down here on the bottom of the Bollinger Bands below the 9-day. It's kind of capitulated. You have this gap down to 41. Between 41 and 43, you're trading at 44.98. So you kind of covered this one partially, but you haven't covered it. You got a lot of room up on this one. Be patient. Zim declared a dividend, Jesse says. Short Laco. Then reinvest your winnings on Monday. Yeah. I'm going to talk to more to the YouTube folks when I get off. So that's it. 48 minutes. If you have any questions, hit me up. Thank you to all the supporters. Thank you to everyone who writes me. I really appreciate it. Thank you to everyone who signed up for TrendSpider. Remember, the link's in the description. If I haven't given you access to my algorithm, I absolutely will. I know there's somebody on Instagram that I owe, who is a fellow Tesla driver, by the way. He found me on Tesla. I need to thank Tesla. High five to Tesla. In fact, let's look at the Tesla chart, because Tesla is, you guys know I own Tesla. I said that I think under 200, you could buy it. You could start to. It lost all its confirmation. It's at 189 right now. Elon Musk has some problems. He's going to need to sell more Tesla. In fact, let me look at the insider buys. Yeah, November 8th was his last $843 million. He sold $2 billion of it on November 4th, $1 billion of it on November 7th. So almost $4 billion worth of stock is what he sold. That should keep him covered until the April debt payment for Twitter. But they're losing something like $4 million a day on Twitter. So he's trying to turn it around, but he may have to inject cash. So until then, I think this is a buying opportunity for Tesla. You just got to make sure you don't buy it on a false breakout. But I do think you could trade this one. The algorithm makes you 25%. Buying and holding makes you 20%. Your average win is 14%. You win 37% of the time. And this is a stock that, in my mind, even if you buy it at, say you bought it yesterday at 197, for tax purposes, you could take the loss, if you got some other gains on it. If you need that money, you shouldn't be investing it anyway. But if you want to hold on to it, I don't think you're bad in holding on to it, because I do think these gaps up here, 257 and 247, I think they get filled. I really, really do. This one up here is still under the 200-day. It's a negative trending stock. It's down 3% today at 188. So I still haven't put in the half money that I took out at 750 prior to the earnings call last time, way back here in July. And I missed out on the run. But I took profits. You got to take profits sometimes. So Snowflake, there's one, should have bought it at 120. You got that gap up here. It's probably coming back, kind of doing nothing. It's hovering around that 200-day at 163. Trading at 159 right now. Their earnings are coming up November 30th. I like it. I just buy this stock. I do. I just buy it. Hershey Company. We talked about this one. It was in no man's land. The actual cross-up might happen. Might happen here. The algorithm doesn't do you great. 12%. Buying and holding makes you 41%. Your average win is only 3%. You win 46% of the time. So it's definitely got some support here at 225. I mean, that's where this one just does the hula dance. You know, you see the guys moving their hips. This one's just moving its hips. The rest of the body's not moving. It's just hips. So, have any questions, hit me up. I will talk to you tomorrow. Have a great night. Exports onto disk. It's moving its hips. Bum, 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 bum. I agree. I mean, Joe, I was going to bring that up. I think I had it. Yeah, I had it in my notes up top. GBTC. Did we have a cross up on GBTC? I need to set up my crypto scan. GBTC didn't have a cross up. But it's damn close. I think it's going to cross up. No, it faked. See, it faked us out. Faked us out. But I agree, Joe. Schlumberger is killing it, Jesse. I hope you got into Schlumberger. By the way, I'm going to message you on Instagram, Jesse, later. Your best friend's a degen. Yeah, Brett. I've heard good things about Webull. You know what? Let's go to Webull. Do they have, let's see. Enjoy tech. Enjoy investing. Zero commissions, no deposits. Everyone gets smarts for investing. 12 free stocks. Brett, message me on one of the platforms, whether it's Twitter or Instagram. People have been messaging me on Facebook. If you haven't joined the private Facebook group, just join the private Facebook group, and you can message me there too if that's a little easier. I'll get you set up. And I've heard good things about Webull. My only problem with Webull is, so you do have a brokerage account, you have an IRA, full extended hours. We support full extended hours trading. Wow, I can only trade at 7 a.m. on Fidelity. This one gets me till 4 a.m. That's where all those degenerates are trading at 4 a.m. Brent, how am I going to... Email me. Here. I will send you my email address in the YouTube chat. Let me look up my chat doc. Chat. Daily Stock Pick 3 at gmail.com. Hit me up there, Brent. Hopefully, email is not considered social media. But hit me up there. I'll email you back. I'll get you set up. Where there's a will, there's a way. By the way, I'm pretty open about I get a commission for TrendSpider, but even if you don't, I'm pretty willing to give you the algorithm. I should be a little bit more greedy about it, but I'm just not. See, and here's the this is why Webull, I think, gets a yeah, Brent, I'm there with you. I was actually happy this morning opening up Facebook and not seeing anything about Trump announcing from my friends. And I kind of commented to everybody and said, hey, it's nice to see no politics being discussed amongst friends. Because I did whittle down my friends on Facebook to follow. If you mentioned politics, I unfollowed you. I didn't unfriend you because I want to keep my friends, but I just unfollowed you. I talk about politics mostly in regards to business sense. But this is why Weeble got I'll tell you why Weeble got a bad name is because a lot of people will paper trade on Weeble, and then they take screenshots of that paper trade and they flex like big boys on Twitter, and it was clear that these people didn't have any money. They had $1 million accounts. Yeah, I mean, listen, we're all in the same team, Brent. Republicans, Democrats. What really pisses me off, it was funny. I watched that LBJ movie, Bryan Cranston. Let me tell you, I'll tell you exactly what the movie was last night because I did text it to a few friends. Who did I text it to? I must have texted it to my... It was All the Way with Bryan Cranston. I think it's on Showtime. No, it's on HBO. It's on HBO. And it's interesting to see him work across the LBJ for the Civil Rights Agreement and voting rights, where he got blacks the right to vote against the Democrats, by the way. And it was just interesting at this time to understand how Democrats ruled the South, and Republicans made inroads with LBJ, getting black folk their right to vote, and how he did it. Bryan Cranston is just a genius. And yeah, we're all kind of on the same team. And that's what I think a lot of these politicians don't understand is we're all on the same team. We're all Americans. Nobody's trying to degrade this country or lead it down the wrong path. Everybody's trying to do it. They just have different ways of doing it. And I tell all my friends, the Republicans constantly beat on the Democrats for spending, but the Republicans don't cut the spending. All they do is cut the taxes. They cut the income. They don't cut the spending. And the Democrats complain that all the Republicans do is cut taxes. So what do the Democrats do? They have to increase their spending so they increase the taxes. It is what it is. Yeah. Mike, we're all middle of the, listen, I not to get on politics, but I told people this morning, if you're a Democrat, you'd love that Trump's running because he's going to blow up the Republican Party. If you're a Republican, you despise that Trump is running because he's going to blow up the Republican Party. Because make no mistake about it, that man, if he does not get the Republican nomination, he will run as an independent. Now, here's what the dumbass Democrats are going to do. I think Joe has just as much ego as Donald Trump. And I think Joe is going to say, yeah, I'm 80 years old, but I'm still going to run because I'm the best thing for the country. Well, no, you're not the best thing for the country when you're 80 years old, dude. But who are the Democrats going to put up? Kamala ain't going to win. Bernie ain't going to win. Elizabeth Warren ain't going to win. So I think if DeSantis gets it, and I'm not a DeSantis fan, I think DeSantis is a bully. I think some of his platforms are correct, but I think the guy's just a bully. He's the guy who, in middle school used to hold kids underwater who were weaker. And maybe you like that kind of guy. I don't like that kind of guy. But not a fan. Sorry. Okay. Did I get fired up on that one? Yeah. And you can hate me for my politics. I love to debate politics because I don't think that there's a necessarily right or wrong from an American standpoint. If you're American, there's no right or wrong. There is just, hey, the majority of the people do believe in this, and this is the direction that we go. It's kind of like, okay, let me put it to you this way, and none of you degenerates work. I'm unemployed, but I know none of you degenerates work. But say you're working on a team, and the leader wants to take it in one direction. Do you go in that direction, or do you constantly fight and undermine and try and move it in the direction that you want in. Yeah. Joe, you also have friends that are degenerates. So you're check marked off there. And I hope you voted for Trump. You voted for Trump over Hillary. I don't blame those people. I do blame the people who voted for, voting for, and I don't blame them. It's just when you saw how Trump governed, that was my problem. Oh, Mike, you work nights. Mike, I might take you up on this Webull thing. I might open up an account because I do have some folks that I'm mentoring. And the paper trading interests me. And yeah, I have heard really good things about their app. Fidelity's app is not the best. It's okay. I'm going to move you over here. Let's look at our favorite. Yeah, Trump's policies aren't horrible. But when you're asking to govern, all of America. And when you make half of America your enemy, that's my problem. Politicians are politicians for a reason. They need to be publicly wishy-washy in order to make the majority of the country feel good about the direction of the country. When you get into partisan politics and you claim that that's why I kind of like Biden. I mean, Biden, he's worked across the aisle. I just think his policies, he's moved too far to the left. And his policies are a little, not the greatest. But it is what it is. Plumbers. Look at Boyle. Boy, it got killed yesterday. And I think it's coming back. I like the stock. I'm gonna look into Webull. I promise I'm gonna look into Webull. I'm not moving money over to Webull, but I'm gonna look into Webull because maybe I can recommend that one too. Yeah, Jesse's a degenerate as well. Hey, look at that. Now that I'm back, my audience size went up. Guys, when I took that week off to do the MLS finals, I think I lost about 3,000 active daily users. And I don't make my, I won't show how many listens I get and stuff, but that's why I'm always shocked that there's so few people. Does he do classes? Brent, have you paid for that? I don't mean to get too personal, but Gray Joe. No, remove from episode. Which one do I want? I like that one. Nightlight wins. I'm interested. So Ricky G is one of the guys. I don't mind him. I've traded some of his stuff before. Specifically, I think he used to really like Best Buy. And I bought Best Buy and I made, 15, 20% over a long period. Yeah. And that's what I think Zip Trader Charlie charges $400. They make most of their money over people doing that one-time payment. And it's funny because what they've learned is if they charge that big upfront fee, And they don't give you anything for it. I mean, I want you to join TrendSpider. I don't own TrendSpider. I don't get anything out of TrendSpider. I get the one-time 10% payment. In fact, I think it's a recurring 10%. So when you guys renew, I'll get more money next year and stuff. But I'm so sure that's the difference. I'd rather do this shit for free and have you guys pay for a product than just pay to be part of a group. Because I don't know. Again, I don't look to as this being my Ricky funds his real estate from his courses. Yeah, and he's got a system. That's what you pay for. You pay for the system. He doesn't curse. I didn't know that. I do curse sometimes. Michelle, you still out there? We got to get you into something today. That's what I got to find. We got to find you something. I'm going to do some scans for Michelle. Q&A automatically added to new episodes on Spotify. Oh. Hey, I can ask you guys a question on Spotify now. Target missed. Let's see. What am I going to name this one? Earnings tonight. Should you buy? Market update 11/16/22. I like Target, Michelle. I'd tell you if I had to buy one today, it would either be, I'm going to bring you back here. Well, let's look at it here. It would either be Target, and this is a 1-minute chart of Target. See, it's kind of putting in between that 150 and 151. And if we go back here, let me go back to Safari. And we look at Target here. See, it's covering that gap. And it's kind of just sitting there. Yeah, I'll look at SOXL versus SOSS. See, it's covering this gap. And if I drew a support line, we'll just draw this. No, I don't like that support line. Here, we're going to go this. I'm going to drag this out. And I'm going to take off strategy tester. We're going to take off, oh, you can't see all this. Let me see what you can see. Yeah, you can see it. We're going to drag our volume shelf back here to last year. And so you'll see clearly how do I move this? I want to move that right there. And then what we'll do is we'll put this line at the bottom here, which is about 140. And then we'll put at this one, because this covered the gap here. So with Target, I think you're in this range, and it's between 140 and 180. And so Target, in my mind, I think that's your range probably for the rest of the year. So if you buy here at 150, Michelle, I think your bottom line is 140. I don't think that it's too much further down. But I think you've got the opportunity at some point, say they have a really good, and I see the ads and I see the stores. The problem I have with Target is every time I go, they only have 4 self-service checkouts and 1 full-service checkout. So I'm waiting in line. So I don't know how many people are actually doing that. But if you think that you're in this trading range, and again, it's not, this trading range isn't very far. It only goes back to June. But I think that's kind of where this all started. You look at this May, and then June, it just found its bottom here at about 140. And so I think you could touch that bottom down there again. I don't think that you're going much further down than that because retail sales are pretty strong. This year's Christmas should be pretty strong. So I think you're good on Target. And I say that with a long term. Now, let me remove these annotations, remove all annotations, and then we'll go to Macy's because I want you to see the same thing on Macy's. Because remember, Macy's earnings are coming up after the bell tonight. And if I were to tell you the 2 stocks that I like today, like yesterday, I liked Target and Lowe's, I think. What did I like? Let me see. There's Target, and you can see on the 1 minute, you're kind of putting in that support there. Let's look at Macy's. And see Macy's, you kind of lost it, and you're putting in that support around 20. I'd say anything under 20, I think you're good. You just don't have the MACD cross up here. But let's look at, what did I say? I'm going to go to Anchor again. And what did I say yesterday? Because I wrote it in the title of the episode, and I have to go to the title anyway. Baba and Target for their earnings and gap fill. So if we go back here and we look at Macy's here, I'm going to bring you back to Safari. So this is, can you see all that? Yeah. Okay. If I draw these trend lines here, let me bring it back a little bit more because I want it back. This is the high way back here in November of 2021. You got all the way up near $40. So if I draw these trend lines like I did in the other one, I'm kind of thinking that, and it's got more of a top support level, but your 15 is your bottom level. And I draw this line probably about here is where I would say. See where those 2 kind of, really 3. And that's right at 21. You're trading at 20. So in my mind, Michelle, you'd probably want, if you were looking at Target similarly to this, remember Target was way down here between those trends. But Macy's is a little different in that it's a little bit up there. But I would say because you're above this 200-day, that 18 is providing you much more support. You do have this gap here between 18.98, so say 19 and 20. But I think if you get a 19 handle on Macy's, let's go back to Active Trader Pro. Because look, yeah, you're right in that 19 level. 7% short interest. So you won't have a short squeeze on this one. But I like it. So let's say, we're just going to say Trend Spider sale. Click here. We're going to do. I'm going to put this. I'm going to take some names out to protect the innocent. And I'll do, give me a second. Boom. Datadog Insider buying. AEO. NVIDIA, Cisco, Zim, time for Twitter, afternoon scans. I like those. Target lowered guidance. Walmart still up. Lowe's. Apple. We'll use TSM chips. Bullish for TSM. Zim earnings today. Okay. And then we're going to take these support links. Nobody supports me anymore. Let me cry poverty. It's funny. My friend is back on the Virgin cruise. If you guys were listening, and let's do a Q&A. Question was added automatically. Huh. Interesting. So you guys can leave me feedback now on what in the world is going on over there. Michelle, did that make sense? Macy's versus Target? And why I think Target is your better long term. And we're talking 3 to 6 weeks. But Macy's could be the killer, the killer quarter. I like Macy's. Who's in here? This Penny. Hi, Penny. Okay, I'll hug you. Want me to hug you? Okay, I gotta post that I posted the podcast, and then we're gonna do a breakdown. Look, Penny, look. Yes, I love you. I know. You're a good girl. Be patient, though, Michelle. That's what I find. Oh, look at that. Somebody else just signed up for Transpider. Ooh, another person signed up for Transpider. I still laugh. The Al Gore rhythm. How good was that? Mike, you're a legend. A legend for me with the Al Gore rhythm. Ooh, I've got some. There is no way either one of you have to go out. I don't want any crying. I know what's happening. You're just bored. You're just bored. That's all it is. NLST. AEO. I was telling one of my girlfriends yesterday, I said, you need to go to your soccer mom PTA meetings where everybody's having rosé for days. And pump my podcast because I want more female representation. Target. TGT. WMT. Lowe's. We're going to put that in there. HD. Apple and TSM. TSM. And I'm So XL, TQQQ, SQQQ, and SPY. And that should get me out there. Oh. By the way, let's look at this. I missed the one you should have gotten today. Maybe a Zim. It's up 3%. Let's go do some earnings results on Zim. Let's see. Zacks. I hate Zacks. Let's look at the finance. Recorded Q3 net operating $1.17 billion. Continued to deliver strong results. Declared Q3 2022 of approximately $2.95 per share. So Zim is going to pay $2.95 per share at a $26.88. This is crazy. Crazy. So that's like an 11% dividend for a quarter. It represents what? 30% of its net income. So they're not reinvesting. They're just giving it back to you. Q3 dividend, $2.95 per share. Is that what you have to do? You have to pay the Israeli tax? Is that what you were telling me, Jesse? Let me see. Zim tax on dividend. Oh. Here's what it is. General withholding tax treatment under Israeli law. You're right. So of the 10%, they're going to hold, if they do a $2.95 share dividend, they're going to hold, what is it? 25%. What's 25% of $2.95?
It's approximately 74 cents.
What's 295 minus 74?
It's 221.
So $2.21. What's $2.21 divided by $27.26?
Here's what I found.
Oh. What percentage is 221 of 2728?
It's approximately 8.1011%.
So you might not making 10%. You're making money, but that gap down would concern me when you're paying that much in taxes. Because here's what's going to happen. Good point on this one. Let's go into strategy tester. Boom, boom, boom. So here's the setup. And here's what happens. So these people at $48 got a $4 dividend. Was about the same amount. But then you had to live through that downturn. And so not only did you not necessarily make money, but even that dividend didn't pay you back. Now you've been putting in this capitulation here between 22 and you're almost at 30. Yeah. Let me write to Tom and tell him. This will be good. Pointed out to me on YouTube. I think they paid $11. By the way, if anyone was watching CNBC yesterday, Netflix cancels. Why am I not featured from Good Pods? I think I've done a lot for Good Pods. Let me see. It says there's a Q&A on my podcast now on Spotify. Oh, look at this. Ready for the next great book? We've got some suggestions. Turn on push and email notifications to find out about audiobooks you might like. Do I care about that? Let me see. What do you think about this episode? Reply. You're awesome. Thanks, your reply is being sent. If you guys listen to me on Spotify, reply. Oh, I get some trash talking on fantasy football going. Light socket security cameras. Okay. I posted that. Do I owe you guys anything? Because it is almost 11 o'clock. Usually I get off about right now. Yeah, Zevin, one of my girlfriends, not girlfriend. Yeah, this is douchey. I hate when they include. Penny, I love you. Dan's right, man. See? Sam is right. Penny, what is it? What is it? I know. Adderall. Oh, yeah. Brent, give me 2 seconds. This one is like dying for me. I think she's got to go out. So let me let her out. I'll be right back and I'll do SOXL. Give me 2 minutes. Okay, you got to go out. Let's go. Let's go. Let's go. Oh, look who's under the blankets. I know it's cold outside, Penny. It's 43 degrees. Let's go. Sorry. Do I still have 18 people? I still got 18 people watching. You motherfucker stayed for the entire time. Ha ha. Let's look. SOXL versus SOXS. SOXL, I think I went over this one earlier. And I want to look. Who texted me? Oh, my health plan. I had to sign up for healthcare.gov. Here's SOXL. Can you guys see? No, you can't see the bottom. You can just see the chart. So SOXL, I see this gap right here between 956 and 1048. It worries me a little. Where's my volume? My volume is way back here, which is way too long for this particular stock. We need to move that back here because you should not be holding this one for very long. And see, you got your volume shelf right down here at the bottom of this gap. You're not really building huge volume shelves up here because I don't think a lot of people are buying. If you close above this 9-day and then the next candle closes above that 200-day, and Brent, you've got Trend Spider, so you can even set, you know what? Here, watch. Create alert at this time. SMA, alert name, SMA above, expiration, we're going to say breakthrough. And alert fires, we're going to say 6 cents of that 200-day. SOXL above 200-day. And we're going to say, we're going to keep it for 3 days. Boom. Now, here's what happened. I don't know why you're... But your 200 days right at about 1351, I think. Yeah, don't do after hours. Do not do after hours. Just 4 hours. And I've got a line. I think I used line. Or do I do bars? I think I do bars. Yeah, I do bars. I was using raindrops as my candles, but I use bars. 4 hour. I don't think there's anything there. Yeah, you don't want turn on linear scale. Indicators, other data. Alerts and bots. Oh, we can turn on chart patterns. I'll turn on chart patterns. What the hell? I don't like extended hours. Don't do extended hours. But see, now I'll get an alert when XOL breaks through that 200-day. And this is the other great thing. I don't have to sit here and watch it. You can create an alert super easily on this one. But I'd say if it breaks above if it closes, so you're looking at closing the 4 hour above 1262, which is going to be a big move up. And if the afternoon gets above that 1360, it's asking for a big if. If that's the case, I think XOXL continues to move. In the reverse, I think SOXS, you can clearly see that you're out of this one, but that MACD is coming up. And this candle that you see, it's moving more towards the 9-day. And I think you can just play these against each other. I think you've got more, because you've fallen so much and you've got this upward gap right here between 46 and 53, I think you could easily buy this one before that MACD crosses up and feel fairly safe. The problem that you're going to have is if I bring this up here, you have no volume to actually bring you up here. So all of the volume will need to be built, which means you're going to have to start bringing that, showing people, you're going to have to start having buyers really show up in SOXS. And with all of the news of Taiwan Semiconductor, ASML, all of those other chip manufacturers, NVIDIA earnings could completely derail you on SOXS if they come out with some type of killer application, killer announcement. Their inventories are down, they're selling. They could kill you. So that's the danger of this one. The good news is you've got NVIDIA running into earnings, which means they're going to have to blow it out. And you've got an opportunity here. I think at SOXS, I may take a chance. I may put a couple $1,000s in on this one because I do think it's worth an opportunity because you got that gap up there. The only problem that I see, again, is if I pull this back kind of to here, you still don't have any volume here. The volume's really here between 44 and 47. And then you've got this magnet up to the 52 range to fill that gap. People are holding this one. No, SOXL, if I had to choose between the two, Brent, I'd say SOSX has more of a chance of going up than SOSL does because SOSXL just been on that run. But from a long-term standpoint, when you look at the daily, I mean, SOXL is just beaten down. There's no reason to think that it's coming back. SOXL. Let's look at the daily on SOXL. This is what I always do is I'll look at longer term just to try and look at the trend. I mean, the trend is clear on SOXL. So I don't know, for today, you could always think that, okay, I'm going to day trade it and just look at it. If we pull this back to its recent highs here, I mean, you have the next volume shelf is up at 19. You could see it jump to 16 because a lot of people are holding there. But the 11 kind of has a shelf here. If we go back to a weekly, there's the SOXL. See? Still hasn't made a huge run. Still got, from a weekly standpoint, still has. So SOXS might be a good one for the day, but I think from a weekly standpoint, SOXL still has some pretty good room to run. Yeah, if you can, I have to look at Webull. If you can do shit like that on Webull, I mean, more power to you. It's more about, again, what you feel comfortable with. Webull offers it for free. So trade, if you can trade on Webull and do a lot of this stuff, you can absolutely 100% just use Webull instead of TrendSpider. What I'm teaching is not necessarily, hey, you have to follow this program. It's figure out what you're comfortable with. And by the way, Target's moving up. Let's go back. It's not moving up big, but it's recovering. Remember, any reaction in the market is an overreaction. See, we've moved up to 154. We put in that kind of bottom at 150. Yeah, TrendSpider, listen, TrendSpider does their research. They know a lot. TrendSpider has a ton. But if you're just using, alerts and you're just looking at some charts, I have some carpal tunnel, by the way. $300, $50 is a lot to spend for a year for a lot of people. Remember, I do this full time, so it's not my main, it is my main job. I write it off on my taxes, so I can write down $350 of income, but you're still spending $350. It's whatever you feel comfortable with. I guarantee you, though, if you get TrendSpider, I'm getting that payment every year out of you. Because I traded without it. I'm telling you, I traded without it for 2 weeks last year, and I didn't trade. I did day trades, and I wound up just feeling naked, like I didn't have all the information that I needed to actually day trade on it. So, I want to know what I'm actually looking at right now. It's Ford. It's lost all its momentum. I think you're going back to 11 from Ford. You can write off Ricky's class. So again, I'm not a tax professional, but it's a professional expense. It's kind of like real estate agents write off their cars. Ricky's not, listen, Ricky's good. I think Ricky's, if you want to follow Ricky, I think Ricky's good. My problem with Ricky is his system isn't fundamental based. His system is more momentum based. And I think momentum has its place, but more people have been made rich by buying and holding than trading momentum. He's not rich. He's not wealthy because of trading. He's wealthy because people buy into his courses, and then he invests in real estate. And so, my portfolio is 40-40-20. He's got an expanded portfolio where he's got real estate. He's got the classes. He's got passive income coming in. Plus, he has his trading. So he's got this whole, remember, and this is why I want to start the FIRE podcast as well, is to try and teach the people that listen to me. I live one way. And part of that is if you have a certain set of income, you have to live based on that income. And I've been doing it for 3 years now where I haven't worked. I do the MLS stuff, but listen, guys, I'm making, I think it's about $15,000 a year off that. So I'm not living any quote unquote major lifestyle. Oh, and by the way, UNH is taking off. Everybody's moving towards safety. But yeah, the FIRE podcast, I think what I'll do is I'll do it once a week. So I liked Meet Kevin. Meet Kevin is every real estate agent that I despise. A guy who's simply in it for money. I don't think that he has his audience's best interest in mind. You can find him on YouTube. He's got a super flashy channel. When I first started following him, I think him and Grand Stefan actually met, and I don't think that they're too good of friends anymore. There was a pretty good falling out, I think, at some point. But he went heavy on his real estate at the beginning, and that's what he really focused on. And then the pandemic came up, and he saw what Graham Stephan was doing from hey, you can get free money, blah, blah, blah. And he went after that free money, and that's how he built his channel. It was 100%, you can get free money out of the government, and here's how you do it. And that's where I followed him. I did, I got some money out of the government based on his recommendations, and it was great. I mean, he gave a lot of helpful information. After that, I think he took a turn where he went the Ricky direction, which was, I can monetize my audience. And so that's where I seem to think he doesn't have his audience's best interest in mind. It's more about meet Kevin. And for instance, a good example is the FTX situation. FTX paid him a boatload of money to sponsor his videos, for him to talk really good about Sam Bankman-Fried and to really talk good about FTX. And then he comes out and says, guys, I should have done my due diligence. I am sorry. I did wrong, blah, blah, blah. That's fine and dandy to say that, but you don't take money. Like, for instance, I wouldn't take money from, like, I took money from Anchor. You guys listen to my podcast for all those months where Anchor was sponsoring me, and I did a spoken ad for Anchor. I believe if you have a passion, start a podcast. It's super easy. I got Rick started on a podcast. I've got 3 other friends that are starting podcasts because they like it. They like talking about it. I started this podcast because I geek out on stocks. I wanted to help people. I haven't lost that part. My feeling on Meet Kevin is he probably lost his guidance of, hey, I want to help people, into, they did a CNBC like a video on how he made $6 million in a year, went from 0 to $6 million in a year. You don't do shit like that if you're trying to help people. You do shit like that if you're trying to pump up your own brand and pump up yourself. That's my feeling on Meet Kevin. I don't think he's a bad guy. I just think he's lost his way and he's in it for the wrong reasons. And here, we can go back to, by the way, look at UNH. It opened up and it just shot up because people are flocking to safety. But here, let's go to, because I do think I still follow him because I see him every now and then. Meet. He's pretty popular. Meet Kevin. There's a bunch of... Did he get rid of his Twitter? I think he got rid of his Twitter. Probably over the FTX situation. This was him. I mean, that's his picture, but he's only got 47. Let's Google him. Kevin. Bum, bum, bum. This is his YouTube channel. Ah, there he is. I knew dude loves press. He's not getting rid of his YouTube channel. His Twitter, I mean. This is him. Now, does that face say, you're a douchey real estate agent? It does. And I know real estate agents that aren't douches. That's the douchey. And look at the picture up here on the right. Which I'm sorry. Yeah. I mean, that's, again, I just, he's, yeah. Hopefully I didn't go too hard on him because I don't believe that he's as bad as Jim Cramer. Let's put it that way. He's somewhere in between Elon Musk and Jim Cramer. Because I think Elon Musk, honestly, you guys may think that Elon Musk is a douche. But I think Elon Musk is out there to help people. I don't think he's out there to hurt people. What he did with Twitter and buying it, I think he wants to do it so that people will be better for it, so that people can, enjoy it. I agree with, who was it? Was it Brent? Who doesn't have social media? Let me see. Or Mike? It might have been Mike. Oh, Mike's the one who did the joke, algorithm. I love that one. Mike, you're a legend. Yeah, and again, Meet Kevin is all about the classes. He's making his money off of his audience. And I have a problem with that because, again, I will charge if I do a little yeah, well, that's because you're a degenerate, D-man. Throwing out there. But no, hey, if you're willing to pay it, I don't blame the guys for taking the money. I do blame the guys that I think they get a little bit, their egos get way too filled for what they are. Meet Kevin is an above average hustler. He's hustled. He's made his money in real estate. He also, part of the reason why I won't do real estate and why I don't buy real estate and I'm not a landlord is, listen, if somebody came to me, a family came to me and said, listen, we lost our job, I can't make the rent, my ass would be like, that's fine, just don't worry about it this month. And I just can't do that. It's part of the reason why I can't buy into some of the REITs, the real estate investment trusts, is because they're constantly raising the rent on people. And I'm just not that guy that can do that. I won't buy into prisons. Michael Burry bought into a ton of prison stocks, and he's made a fortune buying into prison stocks. I can't do it. I'd rather see if there were a private prison company that was not necessarily incented by locking up people, but incented on the amount of time that people who were in their jail spent out of jail after they were in their jail. That's 100% what I would invest in, even if I made less money. But you got your own principles in the world, and a lot of people in this world are capitalists, and I won't fault them for it. Kudos, I've probably had my parents are questioning why I'm in oil. I'm in oil because the world needs oil, and I think that, we should have oil. But am I throwing darts at myself for investing in oil when I probably live a more carbon neutral lifestyle than most? Nah. Yeah, Kevin's a sales guy. That's what he is. Nothing wrong with it. Used car salesman, same thing. He pushes his classes. But I will tell you, his YouTube channel, am I following him? No, I'm not. See, I'm not following him. I should probably follow him. Met Kevin. What is Met Kevin? Oh, it's Linktree. God, even his Linktree looks douchey. And look, he's got this one bouncing. Kevin's real estate stock and wealth programs. It's bouncing. Oh, he does Webull too. So he you know what? Brent or Jesse, if you guys have a link for Webull, post it up there. Because I think you can, hold on. Become a Webull affiliate. Because I don't think oh, there it is. Webull affiliate. Bum, bum, bum. Commission rate, 25% of any sign up and up to 75% on trades. Holy shit. You bet your ass I'm signing up for Webull now. Based on you guys liking it. Because there is no initial startup for affiliates, nothing is holding you back from taking advantage of a high-ticket affiliate program. The money you're making from Webull, friends and family can earn $300 for referring other influencers. What product can you promote? Finance is the best. Stock, cryptocurrency. How much do Webull affiliates make? Those free stocks could be worth up to $40. How much does Blogger make? Plan A gives you free stock worth 10 to 15. Plan B, how does the Webull cookie last? How do you get paid from Webull? Weekly. Podcasters. Shit, my ass is signing up for this. Easy to promote. Only existing members can become affiliates. Be a member. Oh, I have to pay for a subscription? You can only choose one compensation plan. Influencer bonus is contingent on their adding accounts. My ass is going to do this. I'm going to do it. Why not? Yeah, and see, D-Man, that's part of my creating my laziness and giving you guys stuff as to how I learned. It's just shit I learned on the internet. And so I want to charge a small fee for my time in putting it together. But I'm not going to charge like $500 or something like that. I mean, we're talking $25, $50. And the system that I put together for learning, it's been, what have I mentored? 20, 50 people, somewhere in that neighborhood. And they've all done well. They each say they come out of it with a huge amount. But let's see. Let's look at Moo Moo. Moo Moo affiliate program. Moo Moo might be better. Let's see. How much? 8 to 12% new customer orders, first paid order. 1 to 2% returning customers, same day setup. Time to time, you'll have questions that can't be answered on the affiliate program. Let's see, read our FAQ. We work with affiliate window or commission junction. I've heard of commission junction. Once you're approved, how much can I earn? There isn't a limit. How am I paid? Are there application to commission junction and move affiliate program is totally free? There are another costs. Can I monitor sales? What are my responsibilities? Yeah, I'll probably sign up for Moo Moo too. Yeah, listen, there's if you get here's what you have to understand about most of these people on the internet. If you get a very loyal audience, I think, the commissions are unlimited. I mean, I look at the tips that you guys give me. I'm not making a fortune off these things, but you guys are generous. I'm thankful for it. But I won't sell you anything. I won't buy anything. The only reason why I'll do Webull is because you guys have recommended and you guys like it. I trust you guys. I mean, if you guys like it, then other people are going to like it. It's the same thing as stocks. Let's see. Let's go back to Active Trader Pro. I think for a long term, SOXL is probably a good bet. But look at it. It's down 11%. It's got no confirmation today. Look at SOXS. SOXS has all the confirmation today. So it depends on your actual time frame. Why is this not going over? Why is it doing XPEV? So XOXL, look at SOX. Oh, I don't want SOX. I want SOXS. Look, that's crazy good confirmation. And we looked at it earlier. SOXL still has long-term validation from a weekly perspective. SOXS does not have a cross-up as of right now. If we look at I'll go back here. So there's the cross-up in SOXL, and this is a weekly. But if we run the algorithm, see how it's still got confirmation on the weekly? If we look at this, See how SOXL is crossing down on the 4-hour? So it really depends on your time frame. I would suggest shorter time frames on these. SOSX it looks like it's going to cross up. I mean, I talk about the button hook on the stock. Look at it button hooking up. Look at the RSI is at 32. But here's what you have to understand, Justin. NVIDIA is coming out with earnings. And those earnings, if for some reason there is a crazy, crazy good catalyst in the NVIDIA earnings, your SOXL is going to fly. So I particularly would probably, if you've got profits in either one, take them before NVIDIA earnings. Take them before the end of the day. D-Man, here's the thing. Anybody who does that, it's just guessing. I think financials have been beaten down and they're staying down. And with rising interest rates, I think they can still make money. I think energy, which is only 3% of the S&P, I think that's still got room to go because I think that megatech probably will come down. So I think energy from now until probably say June. And the reason I say June is I was kind of going over my head. When will we know? We know that the Republicans are in charge of the House. We know that the Democrats are in charge of the Senate. We know that there's gridlock. Biden has kind of said, hey, we're going to work with the Republicans, but there's a couple of things off the table. Climate change is number one. So what are they talking about? Crypto industry wants IRS fix in lame duck. Oh. So yeah, I mean, if you want to know what I think is going to bounce back, I think the crypto industry, honestly, is going to bounce back a little bit. I think it's amazing how well Bitcoin and Ethereum have held up through an FT. The number 2 brokerage, FTX, has completely crashed, bringing down others. And it's holding up. Yeah, kind of. I mean, again, it's all just a guess. I still think energy, I think oil, it was shown through the pandemic that oil companies were able to bring their average cost per barrel down, and they've continued to do it. So as long as the price per barrel stays up, if the price per barrel cost comes down, they're making more money. Not sure if that goes to my Webull account, but there's a link. Finally making money on YouTube. I don't know. I'll look at the Webull affiliate program. Okay. It's 11:30. I got to get my day going. Guys, I haven't showered yet. So, okay. I've given you guys a lot. I'll give you guys more tomorrow. Jesse, I'm going to email you on Instagram. Anybody that is waiting for the algorithm set up, just hit me up on any of the socials. Here's watch. We'll go to FinBiz Home. Can you guys see this? Yes. Okay. It's the 1 year performance. It's 1 year. This is FinViz. Look at what's clear. Drug manufacturers, healthcare, oil and gas, energy, consumer defensive, hasn't done anything. Packaged goods, consumer cyclicals, specialty retail, you got some in there. Insurance providers, diversified, Berkshire Hathaway. You got your agriculture here. This is 1 year performance. So it's clear these have not been very good for 1 year. But what if we came back a 1 year from now, where would this be? Year-to-date performance hasn't changed much. Let's say PE. Look at the PE. 24, 26. FinViz is such a good website, by the way. Such a good website. FinViz has so much information. Yeah, I mean, again, I don't go that far out. I say, D-Man, in my world, what I think will outpace the industry next year, I think is irrelevant. I think for me and my quote-unquote trading style, it's more what am I using? What products and services am I using? What products and services do I think other people are using? If I'm using it, my assumption is other people are using it. I'm cheaper than the average American. Yeah, if you guys, by the way, message me and let me know anything that you guys find out about how to play the market and where to get information and stuff from. Because I know there's a lot more websites that are better suited towards momentum trading. And I could use momentum trading. I'm not against it. I just say, just like I tell everybody else, momentum and trading as a whole has never made anybody rich, or it's made very few people rich. The good people who do it, they all open hedge funds, and then they charge you 2 and 20. and if anybody doesn't know what 2 and 20 is, it's 2% of your actual holdings. So say you put $1 million into a hedge fund, they're taking what's that? $20,000, $20,000 a year minimum. They're taking from you, and that's just the base. And then if they make you money, they're taking 2% of that actual gain. So they say they made $100,000 for you. They're taking 20 in $1 million portfolio. They made you 10%, but they're taking $22,000 from you. So you still made money, but say the S&P made a 10% gain. Well, what the fuck are you paying a hedge fund for? So no. Put me up there. I'm not in this for the fame. I think, it's funny because I was listening. And if you guys don't listen to it, the best podcast out there is way better than my podcast is My First Millions. And those guys are entertaining as fuck. And they have so much insight into stuff. And if you listen to them, more of what I've picked up from them is lifestyle. And it's how they live their lives. It's how they make friends. It's how they make contacts. It's how they can build businesses. Those two guys by themselves build businesses. I do think that is great. And Sean Purdy, who's one of the hosts, he described it perfectly. When he started the podcast, he didn't want to become famous. He wanted to become known. And the difference is, he didn't want everybody knowing who he was, and to walk into a room and to have clout and things of that sort. He wanted to be known and to have people help him live his best life. Meaning, for instance, shows that he might like. People recommend those to him now. Businesses that he may want to invest in. People come to him now to invest in businesses. Things of that sort. And that's kind of why I started mine. I don't want to become famous. I want to help people. But I also, hey, I want to make it interactive. And that's why I'm glad that I found you guys on YouTube, because I was doing the podcast just by myself, and hearing back from people and the timing of a podcast, it's hard to listen, to actually release it. And I remember, releasing podcasts and then, seeing all the people listen, and I don't hear from anybody. But YouTube, I hear from people, and I like that. It would be better. And in fact, maybe on Twitter, maybe I'll hold a spaces one time so we can actually have a discussion and talk about stuff. Because I should have that. But the Facebook group, remember, the Facebook group is there. It's private just so that, douches don't come in there. And if you're a douche, I'll kick you out. But I'd like to keep it private. But it's there so that we can have a discussion after the hours. So, Google's crazy good. I love Verizon is so beaten down. You bring up a good point. Verizon is so beaten down. Now, I have visible phone service, and I do believe that phone service, mobile phone service, is a race to the bottom. If you go to Europe, God, those people pay like $5 or $10 a month for their phone service, but it's also heavily regulated. But it's just a race to the bottom. Look at Verizon. I mean, this is a company that has a yield. What is it? Up near 7% now. 6.92%. Its PE is 8, but they're spending so much money. I think my visible service is going up to $30 a month, and I'm pissed. But yeah. Hey, Larry. You're welcome. I'm happy to do it. I do feel, and I will tell you guys from a personal perspective, when I do take off, I feel guilty. And I shouldn't, but I do. I feel like I'm kind of letting some folks down because there are people who support me monthly, and they pay monthly. I don't mind if you guys tip me. I think the monthly ones through Anchor, they take some percentage out through Stripe. And I'm thankful for the payments. I mean, listen, it is what it is. But if you wanted to one time tip me on the Linktree and the personal thing, because then I don't pay fees. But Stripe does, take out their fees. It's not a big deal. Hey, we're all in this, to make money, and Stripe provides a service. Wow, American Eagle is down 6%. God, I'm getting killed today. Let me see. Check in on your portfolios. I'm down 1.28%. Versus the market, I am underperforming all markets. It's Apple. Because what's Apple? Let's see. Well, it's not Apple. It's the ARC. It's all the high flyers of the past, the recent time. God, even GBTC is down 8%. Ugh. Target is down 12%. It's coming back. It's at 156. Remember, I started saying it was building that floor at 150. Yeah, actually, Michelle, if you bought that one at 150, if Michelle's still on, if she bought that at 150, she's close to 5%. Again, any reaction in the market is an overreaction. I continue to think that. So, and I'm coming back 1.22%. Yeah, well, I mean, here's the thing, D-Man. I go over what I hold long term and what I think. And look at SOXS. Let's go to active. Are we on? No. Look at the chart. It's losing everything. So while you're day trading, kudos. Perfect. See, you can't time it, but you're at 156. What's that, about 2-3%? You're up. I think the market's going to come back. I think we're going to see a down about, probably on the NASDAQ, 1%. The Dow's up. I think you're going to see the Dow flat. The S&P's down 0.47. Yeah, it's coming back. Who tried to call me on? Oh, she just tried to call me on FaceTime. Okay. I am out. You guys have a good day. I gotta go return some phone calls. Jesse, I will message you on Instagram. If I forget to message you, message me. I'm horrible at this stuff. But take care, guys. I'll talk to you tomorrow.